Okay, here we are on the euro at the end of the week, March the 12th, 2010. We're going to review the euro dollar. Let's take a look here. For the euro dollar, for that week, we had 1, 2, 3. We started off the week with 3 trades that filled and gave us a profit, and ended up with no fills on Thursday and Friday. Let's look in a little closer. Let's see what all of this was all about. On Monday the 8th, we took the short, I believe is what that said back here. Yep, 136.59. And why did we short that? Well, we had a first full house here. We were long at the top in a narrow range. Okay, that's why. It was also the Fibonacci day of the trend. The third for the correction, which is what we got. Went as high as 137.04. We could have went a little higher, but we went at 136.59. Of course, our stop was well above the 704, so we didn't get stopped out. 136.59. We could have took 136.94, but we stuck to the rules. Okay, 136.59. We went short and got a gain. Okay. The next day, on Tuesday, we look into it, and what do we get? We turn around and we go long. 135.84. So at 135.84, well, why 135.84? Well, it's because here we have the support 135.81, 135.87. Also, it's the day after the first full house, which means we continue on with our trend. Actually, the trend was down, so in a way that was somewhat of a mistake to try and go long there. Did we get any other signal? We had a reversal signal. We short bottomed narrow range, which is the reason why we decided to come back the other way and go long. But we did not do the double dare because we're not anywhere near transition. We're simply going long for the support. It's the 4th day to continue on. We've made the correction on the 3rd Fibonacci day. We're still in consolidation. You know, it is what it is. So we went at 135.87, got the fill, went as low as 135.37. Trying to short at 136.46 would not have worked, simply because it wouldn't have been filled. But we did take the long because of those signals that we had over here with the reversal in the short bottom, and the fact that short term we were in a long move that was freshly started. So we did, and we benefited from that. Then on the 3rd day, on Wednesday, we went long again, 135.69. We dropped it a little bit. It was the 5th day, which is one reason for that. The second reason is because the 5th day can be another correction depending on the action that's taking place, or it could be a continuation to continue the move forward. We went for the support 135.69. We also had 135.41 and 54 supporting us underneath that. Either of these lower ones actually would have filled, but we were just a little bit more aggressive. I'm trying to see if there were signals that would have validated being more aggressive. Well, the tweezer bottom. Okay, here in the bias, it's completely undecided, complete consolidation there. So we didn't want to drop much below the low of the previous day of 35.37 or the 35.30, which it did not. So it was a small risk to take, and it paid off. Then the rest of the week we didn't get filled on our moves in trying to go short on this day at 37.09 or long on this day at 36.61. Neither of these filled, and so we ended out that week on the euro with 133 pips. Okay, let's move on to the pound now. We're going to do a recap on the pound.